Hey everyone, welcome back to Corporate Decoder, the place where we'll unravel the mysteries of corporate filings, but this time we're dealing with a company that is trying to buy itself some more time. Today we're diving deep into a Form 8K filing by AlphaTime Acquisition Corp. Now, an 8K is like a company's urgent bulletin to the public signaling big, important events that just happened. And what is the big news here? Well, it seems AlphaTime is in a bit of a holding pattern, and they just got an extension to find a business to merge with. This report is dated the 16th of December 2025, and it tells us a story about a company that is trying to keep its options open. AlphaTime Acquisition Corp, which is the company we're looking at, is what is called a Special Purpose Acquisition Company, or SPAC. Basically, these companies are formed to raise money through an initial public offering, or IPO, and then use that money to buy an existing private company. They have a deadline to do this, and it looks like AlphaTime was rapidly approaching theirs. The very first thing to note from this filing is that AlphaTime just got the green light from its shareholders to extend the date by which it has to complete a business combination. Think of it like this: they had a deadline, and they asked their investors if they could have a little more time, and the investors said yes. This isn't just a small extension either. They've extended the deadline from the 4th of January 2026 by up to 3 additional months, pushing it out to the 4th of April 2026. Now, how did they get this extension? It wasn't for free. They amended their trust agreement with Equinity Trust Company. For each monthly extension, AlphaTime has to put in an extra $1 for every share into their trust account. This money is essentially held aside to protect the investors. In exchange for these monthly payments, they've also issued a non-interest bearing unsecured promissory note. This basically means they're promising to pay it back later, but without charging any interest, which is pretty common in these extension scenarios. On top of that, they've also amended their corporate documents, specifically their memorandum and articles of association. This is the company's constitution, and it has been updated to reflect this new extended timeline for finding a business to acquire. It shows they are formally formalizing this decision to give themselves more runway. Let's look at how the shareholders voted. The shareholders had to approve these changes. They voted on 3 main proposals. The first was to approve the amendment to their charter, which basically allows for the extension. The second was to approve the amendment to the trust agreement, which is where the extension payment details are laid out. The third was an adjournment proposal, which is a fallback in case they didn't have enough votes for the first 2. In a landslide, the shareholders approved all 3 proposals. The vote was overwhelmingly in favour, with 1748629 votes for the extension amendment proposal and 177,510 votes against. Similarly, the trust agreement amendment proposal also passed with the same vote count. This tells us that the vast majority of AlphaTime's investors are willing to give the company more time to find a suitable deal. Now, with this extension comes a little bit of a reduction in the funds. In connection with this shareholders meeting and their decision to extend, a small number of shareholders decided to cash out. Holders of just 69 ordinary shares exercised their right to redeem their shares. This means they asked for their initial investment back from the trust account. The amount removed from the trust account for these redemptions was about $854.22, which works out to approximately $12.38 per S-share. This is a relatively small amount, indicating that most investors are still on board for the extended journey. After these redemptions, AlphaTime will have about 21,69476 ordinary shares still outstanding. From a structural point of view, AlphaTime securities are made up of units, which include ordinary shares, redeemable warrants, and rights. The ticker symbol for these units is ATMCU. They are traded on the Nasdaq Stock Market, LLC. Then there are the ordinary shares themselves, traded under ATMC, also on Nasdaq. They also have warrants, ATMCW, which give holders the right to buy ordinary shares at an exercise price of $11.5 per S-share. These are also traded on Nasdaq. And finally, rights, ATMCR, which entitle holders to 1/10 of an ordinary share. These 2 are listed on Nasdaq. It is also worth noting that AlphaTime has elected to be treated as an emerging growth company. This classification allows them to take advantage of certain relaxed regulatory and reporting requirements for a period after their IPO. They've also chosen not to use the extended transition period for complying with new or revised financial accounting standards, which means they are adopting those standards more quickly than they could have. So, what does this all mean? Essentially, AlphaTime Acquisition Corp has successfully bought itself more time to find a merger target. The shareholders are supportive, as evidenced by the overwhelmingly positive vote. However, this extension comes with a cost, both in terms of the payments into the trust account and the continued effort required to find a suitable business. The small number of redemptions suggests that confidence in the company's ability to eventually find and close a deal remains relatively high among its investors. Looking at the broader picture, the SPAC market has been quite volatile. Companies going public through SPACs often face pressure to complete a deal within a specific time frame. When they can't find the right fit, they can either liquidate, returning funds to investors, or seek extensions like AlphaTime has. AlphaTime's move is a common strategy for SPACs that are serious about finding a good deal, but need more time in a challenging market. The key risk for AlphaTime now is whether they can actually find a quality business to merge with within this extended time frame. The market conditions for mergers and acquisitions can change rapidly, and the longer a SPAC stays in operation, the more it can burn through its resources and potentially lose investor enthusiasm. In conclusion, AlphaTime's latest filing shows them successfully navigating a crucial hurdle, securing an extension to complete their business combination. They've managed to get shareholder approval and are willing to pay for the extra time. The company still has significant work ahead to identify and acquire a target, and investors will be watching closely to see if they can capitalize on this extended runway. The success of AlphaTime will ultimately depend on the quality of the business they can bring public, and how well that business performs post-merger. Alright, that is our breakdown of AlphaTime Acquisition Corp's latest announcement. What is your take on these extension moves in the SPAC world? Are they a sign of smart strategy or a company struggling to find a deal? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And make sure to subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you in the next video.